Hi, everybody. How's everyone doing today? Alexander, how are you?
Morning,
Everyone doing
Dale.
okay? Hey, Ryan, how are you? You're the guy I wanted to talk to. What lit up?
It wasn't
What
me.
lit up EG today? With is it more about cable weakness?
Yeah, there's a
Or
cable weakness in there. I think we've got the general risk on vibe going on as well.
okay,
There's been a couple of ECB stories out, or one ECB rumor out. Apparently, they're going to look through any inflation spike to do with energy prices over the Ukraine. I don't see how that's hawkish, but it's just another bit of wood on the fire. Yeah, the pound is suffering today. Bit perplexed this morning, but I've got half a thought that I had this morning just seeing some news going about with all these sanctions going on. There's a lot of Russian money in the UK, and if sanctions are going to start hitting people, we could be seeing a few Russians putting some money out, cash, liquid
yeah,
assets,
yeah,
liquidating. There's a lot of property. Russians are in a lot of property in the UK, especially London, so they can't shift that sort of stuff quickly. But anything else that's not nailed down, we that's what we could be seeing in part here in the pound.
okay. I was looking at the euro at this like formation right here, and I think it's the key between the 61.8 and 50%. These two areas. And even if we rallied some more, a breakdown under 1280, because this is 230 pips, would measure about 110.50, which is where Blake's long-term trend line is. And see the stuff down here.
Yeah,
So 1280 is key. And maybe Euro's getting a pop because there's a little relief. Oil's down. Seems like there's a little relief. S&P's, up 50.
yeah.
So why do people feel risk on? Is what really changed overnight
I think
for
it's.
people? Go ahead.
I think it's as we've been saying the last couple of weeks or so. This could go either one or two ways. It all goes bombs and bullets, and it all gets really messy.
Yeah,
And perhaps Europe, the Ukraine, they do a stronger response, maybe a more military response. They're not going to go directly fighting, but they could put their own troops on borders and stuff. Or the other way, where Russia invades and the response from the West is sanctions, which is what are they? Nothing. Go and wave a piece of
Good morning,
paper in
guys.
Putin's face. And morning, Blake. And
yeah, Blake.
what have we got? We've got a soft invasion, really. They're sending in peacekeeping troops,
Yeah,
as
that's
Putin
right.
calls it.
To
So he's got all the army in.
There's separatist regions. I mean, it's not, this isn't like I don't think they walked into Kiev. Did they?
No.
Did I miss something here?
No, but the troops, they were holding back. They were separatist regions within the Ukraine, and now they've said, yeah, okay, we're declaring those, pretty much Russian regions in full name now. And so, because of that, we're going to send a load of peacekeeping troops in. Now, if that's 100,000 troops going in, it's a soft invasion. And a bullet hasn't been fired, so to speak.
Like Crimea, it's almost like a rerun.
Yeah, just walk in. Hello, we're here. What you going to do? Bit of fighting, but overall, it's not a lot. And so I think the market's seeing, right, okay, we've had the invasion. It hasn't, turned out to be, anything a bloodbath or anything. The response from the West is pretty meek. And that's where we're at. And, we've still got to wait and see what happens now. Does Putin go further? Does he now try and grab another part of it? And we're going to see what the fallouts are from the sanctions, which don't look to be too hot. So the market's saying we're not got a full-scale war breaking out, and that's why there's a bit of relief in the market.
Yes, and oil down over $1 didn't make new highs. Doesn't mean it can't. Blake, did you hear his history lesson yesterday? So
whose history lesson?
Vladimir's.
No, I didn't.
Okay, good. Well, he made a speech and he basically said Ukraine was never a country. So yesterday afternoon, everyone said, well, looks like it's bigger. He's talking about other, larger target than just Eastern Ukraine, because he's saying, it's just a puppet regime of the U.S. and it's not a real country, and it's always been part of Russia, which makes it sound like,
Well,
go ahead.
I didn't hear that, but I mean, that's how he's always felt, right? I mean, that's like,
Yeah.
I look at last night. It's like, what Putin's intention is. And for now, it could have been worse, right? I think the market's viewing it as like, well, it could have been a lot worse. Like he's moving his troops, and as Ryan pointed out, peacekeeping troops into like these separatist like regions and areas. And it's like, okay, but now could it escalate? Sure. But what I think we have to be paying attention to now is, see, like let's imagine you're playing, a board game, which to Putin, that's all this is, right? You move into this region, you kind of overstep your boundary a little bit, right? And then what's going to happen? The rest of Europe, and our allies are going to impose some sanctions on Russia. Then they're going to back away a little bit, but still have one foot in the territory they just stepped into, but step back just a little bit, and net, he's expanded Russia just a little bit, right? And it's just this little game that he's like expanding his reach, and pushing it as far as he's going to be able to push it. And I think that's what's happening right now. But I guess the question is, why are the markets reacting the way that they're reacting today? Is, I think, bottom line, a couple of things. Markets hate uncertainty, right? They hate uncertainty. Now that Russia has invaded, or whatever it is, you can call it whatever you want to call it. Now that he's moved his risk piece, or his chess piece, whatever, the market goes, oh, well, it wasn't that bad, and now the markets are recovering. So it's also the buy the rumor, sell the news type of event. Now, can the situation get worse from here? Absolutely. And I think that's what we need to be watching in the days and weeks ahead. Let's see how many sanctions get put on Putin, how he responds to those, because that's going to be kind of key in the days ahead. But for right now, markets are liking it. And I have to point out a couple of things technically, but I want to
grab the charts, buddy.
Yeah, I'm going to grab them right here. And I heard Stelios's voice. I'm sure he's got something to say, and maybe even Steve has something to say. I think.
Oh no,
I'm here.
Steve never.
Oh,
Steve?
Yeah, I never have something
damn it!
to
I
say.
didn't want. I was really hoping everybody would go. Nope, Steve didn't make it. Oh, dang, we missed Steve again.
He's so introverted, that guy.
I know.
Yes, I am.
Let me just talk. Let me just talk about a couple technical things that need to be, just mentioned. First of all, the euro is rallying sharply. Again, I think a lot of this is buy the rumor, sell the news, and something that I've mentioned not only here, but I did the trade off last night with Chris Weston from Pepperstone. If you guys don't watch that show, we do it once a week. It's very well produced. The producers over there, it's like, it's a very
real television
show. It's cool. It's like television. Yeah. But one thing I pointed out, I've been pointing out here and there, is that the euro has actually held up very well in light of all this. I mean, if you look at the last couple of weeks, we're in a 112.80 to 114 range. Yeah. I'm surprised the euro wasn't trading back down at 110, to be honest. But it's held up pretty well. That you have to respect moving forward. How well has the euro really held up? Another thing I need to point out is watch the dollar mex. This thing has been so heavy. If stocks really recover here, and I have to go into like the bigger picture on what I think is happening with the S&P, is I think that we're in a big head and shoulder pattern. So we're probably holding this neckline. We'll probably be bouncing around, and I think we're going to rally.
About that.
Yeah. It's look, if we're going to be consolidating for the next couple of months, we're going to be bouncing around 4,200 or 4,700. Really. We might get all the way up to here somewhere at some point, but I think that depends on, a lot of factors in the weeks ahead if we actually do rally. But one of the things that I really want us to pay attention to is this bounce back in yields. And this is what I said with the there's your AB equals CD 10-year move. But if you look at yields, one thing that I said on the week ahead video on Sunday is if we get a rally in yields, you got to look at the stock market possibly reversing. So if we get a rally in the 10-year and we get to new highs, I'm going to start looking for shorts in the S&P and NASDAQ, and I'll probably more so the NASDAQ, but I'm going to start looking for them in equity markets. The reason why I mention that is because I think that if the market gets a sense of relief that we're kind of moving past all this, then we're going to see a rally back in yields. And it's a conversation I had with if you guys don't know Eric Bosmajian from EPB Macro Research. He's Dale's interviewed him a bunch of times. I actually talked to him yesterday, and I did a nice interview on Trader Summit. His interview should be out later today. And we had this discussion yesterday, like, hey, everybody's kind of focused on Russia and Ukraine, but don't remember what's boiling underneath the surface in the economy. We have to keep in mind all the other things that are happening, because once our ADHD kicks in and we revert our attention back to the markets, we're going to go, oh yeah, there is inflation, and oh, yields are going higher, and oh, the Fed is removing liquidity, oh, and so are other central banks, oh, and they're raising rates, oh my God. Then we're going to have to start paying attention to other things. And with yields just perched up here, my fear is we're going to get the buy the rumor, sell the news in equities. You're going to see equities kind of pop, and today's day one. So, we might have a couple of days back to the 200-day moving average in the S&P, but then, sellers are going to start to step in because of all the other things that are happening. So that's something to pay attention to. Also, one last thing, and then I want to bring in, everybody else and hear their take on things. We have plenty of time. I wanted to take a look really quick at gold. And this is a chart that I threw out at the ForexAnalytix subscribers, guys. If you get these updates, you can actually go to right here, get the basic technical analysis update of gold. It'll be right over here. Now we hit the 127% extension basically of the high back in November to the low in December. The 127% extension, the horizontal resistance from the 2021 highs, but mid 2021 highs. We're just above the 161% extension of that last move. So really, we're just kind of struggling up at these levels, and relative strength. And I used your term last night, Dale.
What's that?
I called it the real simple index.
Okay.
And I got a chuckle internally about that. I was talking to Chris West. I'm just because I was trying to mention to him that the RSI is really divergent on this move higher. Yeah. And then I used the real simple index, and I meant to mention your name, and then all of a sudden, he got to talking about something else. So anyway. All right. Yeah,
you're brainwashed. Okay.
Yeah, it was. I know. I can't believe I said I only everybody that's been watching my analysis for the last 20 years that I've been doing the Morning Edge show, even with the Wise Trade Group back in the early 2000s. You guys know my charts look exactly the same. I keep a 200-day moving average and relative strength. That's it. It's not like I'm throwing on.
Don't fix it if it's not broken.
Ichimoku clouds and all this other crap on there. No, my charts look exactly the same every day for the last 20 years. So every once in a while I'll throw on an indicator because somebody says, "Hey, Blake, throw this on," and I'll try it on for a while and then I'll just remove it. But I always go back to the RSI. Anyway, it is very divergent on this move higher, and that's something that it's obviously a risk for anybody who's bullish. Now, I don't think that you should be a gold bear necessarily.
Go to a 2-hour on that, Blake, and you'll see the real simple.
Say gold bear once more. I'm kicking off this webinar.
Gold bear all day long, baby. Kidding. No, I'm just. But no, jokes aside, I think that gold is at risk of a pullback, especially if the market looks at everything and says we're gold's up for that reason. And one thing I did point out yesterday on the trade-off with Chris Weston was the silver gold ratio. And silver, shoot, man, I mean, you know, we haven't even got back to the 200-day moving average. We might be there right now. Oh yeah, we're struggling at it. We hit the 200-day and can't get back above that. So yeah, what do you do here? I mean, when silver is not leading gold, and then you get a risk that now gold has a reason to pull back, what happens to silver? Well, so that's when you pass it all to Stelios and you say, hey, Stel, here's all my gold or all my silver. You buy it. You buy it here at 24, and I'm going to buy it back from you at 22. How about that? I'm just kidding. I'm joking.
I agree with what you're saying. That's why I'm still not pulling the trigger on more.
Well, let's get you guys' comments on what happened overnight. I just wanted to point out a few things that it's kind of on my radar, but so Stelios, since you're speaking already,
yes.
How do you feel about the whole situation last night?
This situation here reminds me of 2003 and the Iraq situation. If you remember that, I was trading in London at the time, and I remember that, you know, when the whole thing started, there was optimism. Yes, going to go in. This is going to be over soon, and then maybe not. Oh, maybe yes. And there was a lot of toing and froing, and I think we're still going to be in the same kind of environment where there's going to be headlines one way, the other way, and choppiness. Now, what I think the plan should be, or at least my plan is, I like this rally in risk. If we get anywhere near 44.50 in the S&P, I think that's going to be again a good selling opportunity. Obviously, you know where your risk is with stops and everything, but there's going to be two-way action, and I still think we sell the rallies. And you mentioned yields very correctly. You know, if this thing boils over and it looks like, yes, Putin is not going to do anything crazy, then you'll see the 10-year US go above 2%. And then we remember the previous situation where we have, hiking or hawkish central banks, yields rising, which again is not good for stocks. So stocks, I think, are caught between a rock and a hard place, and a potential rally, as I said before, S&P in like 44.50s, 44.70. There's a 200-day moving average coming up, and also the 50-day moving average coming up, and I think they're going to converge around there. We're going to have a death cross or whatever it's called. So, that's my view. I think it's going to be driven still by headlines every day, but my mantra remains: we sell the rallies. That's my view.
Okay. Well, I'm with you. I want to sell the rally definitely. And let's hope we get as somebody, DJ, I think, wrote in, all the Tom Lees out in the world, in the David Hunters that waiting for that melt up. Yeah, let's sell into their followers. How about that? Steve, so I heard your voice. You got an opinion here. Let's hear your Russian.
My Russian, they're a little bit rusty. I'd rather go with Greek if you're okay.
All right.
What I'd like to
Greek
see,
to me,
Steve,
it's all Greek to me.
Your look on the ruble, Steve. I know you're watching it.
Listen, the ruble will obviously, be under pressure. Following whatever sanctions. First of all, everybody can understand why Putin is doing what Putin is doing, right? Because he knows in advance that there's not going to be any real repercussions, right? We knew that. We know that.
Biden forgot who he was today. I'm just kidding. It's a bad joke. It's a bad joke. All right.
What should I say? That it would surprise me. It wouldn't. So, Putin knew in advance that, Europeans and the Western world in general is, all bark, but no bite, right? Now they're considering, the Germans today said that they're going to freeze the approval of Nord Stream 2. You know what that means, right? Absolutely nothing. You know what that means? That they're going to freeze it now that this is in the spotlight of the news, right? And once Ukraine, for the vast majority of the citizens in the Western world, is a thing of the past, as it happened the previous time, they're going to approve of course, Nord Stream 2. So are there going to be sanctions? Yes, there are. Is that going to put some pressure to the Russian economy short term? Yeah, sure. But is any of the European leaders prepared to draw the line and do something to prevent this kind of, political approach from Putin. No way, because we know it, we knew it, and it remains the case, right? That
if Germany isn't, no one is.
Germany isn't. I can tell you in
Okay.
advance, and
All right.
it's as simple as that. So everybody
They might
knows,
send
right,
more helmets.
that in order for you to actually have some kind of a proper, serious policy that can hurt Russia, you need to be prepared yourself to suffer somewhat. Have you seen during the past several years, Dale, any politicians in the West that is willing to go out and say, listen, guys, because of an ethical standpoint and all that, we need to have a strong stance against this, but in order for us to have a strong stance, we have to make some sacrifices, right? Nobody's going to do that, right? And Putin knows that all too well. So do I believe there is something going to happen out of it? And by the way, Blake mentioned it before. One of the reasons that the market rallies today is, as he said, because the market doesn't like, uncertainty. And what is the certainty that the market got in this case out of this? Right? The certainty is the usual certainty that there is nobody willing to go to war for all that. That's the certainty they got, and that's all they need.
Yeah, and hey, just because we only have about 9 more minutes left, Steve, but you're exactly right. I mean, the market's like, hey, we could have been worse, right? Could this situation have gone even worse than it has thus far? Yeah, and I think the market's a little Russia fatigued as well. So, getting a recovery rally today makes complete sense. You know what kind of worries me a little bit? Though you guys want to be a real believer in the market rally, like you guys want to believe that we're going to melt up to brand new highs. Until I start to see the crypto market really, get its crap together, I don't know if I'm a believer of that. I pulled up this chart last night. I said, hey, to Chris Weston and all the Australians that were watching it in last night, I'm like, it's a pretty key support here at around 34,000, 35,000 in Bitcoin. It's big channel support. But man, I mean, look at equities this morning. Bitcoin's only up 1%. Yeah. Ethereum's only up, not even a full percent.
And look at that RSI at the low, Blake. That was a confirmed low. So, confirmed lows usually aren't the low.
Yeah, I mean, and so I wouldn't be surprised if we take out some of these, take out that low there, Dale. Thank you very much, and maybe see 30,000 again. But this is what worries me about being long risk here. I mean, I think risk can bounce. Don't get me wrong. I wouldn't be surprised to see the S&P up another 3% from for here in the next couple of days, over the next week. But I don't know if it's sustainable. Going back to Stelios' comment, and I'll be queuing off of these high beta risk type of assets like cryptos. I mean, anyway. Steve, thanks for your comments regarding Russia. Now, going back to the euro, how do you guys feel about the euro at these levels? I mean, the euro, I've been surprised how well the euro's held up, but at the same time, we're well below 114. We have to get above 114 to get back to the 115 level. I think that opens that up. You guys have any opinions on the euro down here at these levels? I've been buying. I bought it last week and I just sold it this morning. I took some profits off the table. I mistimed it. I didn't time it perfectly there, which I'm not a perfect.
I think the FX market is very tricky at the moment, but my gut feeling is that the euro might and many other currencies against dollar might have another leg higher before they then turn lower.
Yeah, well, one of the things, and now actually, you know what? I want to see if K-Man's here. Is K-Man here?
I am here.
Hey, there he is. K-Man, you are here. Great. I wanted to talk to you about the dollar yen. Now, And being that you were on a yen desk in Japan for 5-6 years, and you tend to be our, I kind of almost view you and Ryan as like our in-house yen specialists, if you will. I'm actually long some New Zealand yen. If you guys are not aware, I've been aggressively buying this thing over the last couple of days, and I'm looking for a break above, the 38% retracement, 200-day moving average post RBNZ. I think the RBNZ is going to come through with a hawkish hike today, and take us on a recovery back, towards 80. Anyway, but I'm really more concerned right now with the dollar yen because yields are holding up. And as one of the conversations one of the things I was saying a little earlier is, after we get past this whole Ukraine situation, Russia, Ukraine, and, things kind of calm down, or, the attention is taken off of it, people are going to go look and realize that yields are still, near 2% on the 10-year. We're still seeing a little bit of a flattener there, but the dollar yen continues to hold up. Now, we all know, and everybody here should know, that we are coming into a multi-decade trend line that comes in around 117. I think, Dale, you've pointed it out. I mean, we've all pointed it out. You guys have in the chat rooms. I mean, it's a big deal. So what I was thinking, and the way I was going to approach this, as I noted in the week ahead video this week, is, as we get past Russia and the Ukraine situation, if yields start to rally because they haven't pulled back, is the dollar yen going to be pulled with it? And are we going to get dragged back up to this 116.35 and then possibly 117? How are you guys viewing the dollar yen here? I expected a little bit bigger dip down towards the channel support, at this red channel support here around 114, 10 or so. We didn't get it. So how do you see it from here, K-Man?
Well, yeah, I was saying in the chat exactly the same thing this morning, that the moves in FX have been relatively subdued. Okay, we had 350 odd points or so lower in the euro yen, but then the euro has been dragged down with it. But even if we look at the euro, it's only let's say we failed at 115, but then there was the Fed guy, I don't recall his name, calling for
Bullard.
Bullard,
yeah,
for 50 which already took euro away from the 115, and we basically only did the Russian impact is on the euro dollar probably
minimal.
130, 140 points, which is nothing, right? It's a little over 1% compared to prior moves when there was a lot of stress in the market. So the dollar yen is the same thing. We failed again at 116.30, which is now a double top, but we also held around the 114.5, which is only an intermediate support, which is not even the biggest support, which is coming in around 114, 113.5. The FX moves have all been subdued. So in that respect, and I was long also this morning for just a short while because I got called off and then I took my profits too early. I was also long Kiwi yen because of the RBNZ. But I'm actually surprised. The moves have been quite light.
And did you want to add anything, Ryan?
Yeah, no, I'm just in agreement. And as Steve said, it's very tricky at the moment in FX. It's really not moving. Yeah, we might get some intraday moves, 40, 50, 60 pips. And that's good if you're trading the real short-term levels. But if you're taking a bit of a longer view, like I tend to do, trade over days or more than a few hours, we're just stuck in these ranges until we break. I tried a long break today in Aussie dollar at 72.30. We've been hitting our head 72, 20, 25 for the last 4 or 5 days. I thought I'll go with a break. I ended up getting out for minus 15 because it just didn't break. And the same goes with euro dollar. Just can't. 115 is the big level, but we can't even break 114. So we're stuck in the middle. And I was long against 114.80 in dollar yen yesterday, just a scalp, just because it had been a 2-day support level. Ended up folding it last night or yesterday afternoon on all the Russian news coming through, and for a few pips, 9 pips or something. I went short euro yen because I thought overnight we could see a risk move short at 75. It went down as low as 40 odd, I think, before flipping all the way back up again. It's hard. I think it's frustrating as well for some traders, you know, and I said it yesterday, don't get frustrated and trade for the sake of it. And here I am getting frustrated and trading for the sake of it. And, you know, I'm keeping it small, but
just remember, it's not done, right?
Yeah, it's not done.
It's not over. Russia has agreed upon a zone that they say like they are recognize a zone which is much bigger than just the 2 cities in the east. We can't say this story is over yet, right?
Oh yeah, and that's what I was saying earlier. Look, these are it could have been worse, but these are you know areas that you know they're just basically walking into, and then you know we're probably going to put on some sanctions, and then Russia's going to back away a little bit, and they're going to back up their you know the line that they drew, you know that he's remapping on his map, and you know they'll pull back some troops a little bit to appease you know everybody else to get some of those sanctions taken off. It's going to be a lot of back and forth from here. It's just it's a land and people grab, right?
You just can't believe anything from anybody. That's the issue. No.
But you know, Dale, you have an interview right now, right?
Yeah.
Okay, so let me just mention this. If you guys have not taken a look at the trader funding program, make sure you do that. Remember, this is where you can take an assessment. There's a one-time fee to take the assessment. You can actually get ForexAnalytix for free by doing this assessment, because we just want you to, you know, be able to access, you know, the larger real money accounts by being part of our community. And this is our community. If you hear Dale, I'm sorry, you hear Ryan talking about all the different trades that he was just doing. And I mean, this is like chatting community that goes into our community just from when I got up this morning. I mean, I got up an hour and a half ago in front of my computer, and that would have been right here. And you can see all this is just in the general chat room. Yeah. You look at all the charts, all the ideas, and we're just talking markets. A couple of us were having talks about having COVID, but it's just because I was catching up with somebody I hadn't seen in a while. But this is our trades room. Like when Ryan and I and K-Man are talking about all the positions that we're taking, and taking some profits here and blah, 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 blah. And then we have like the macro chat room, where if you want like bigger picture ideas, it's the FFL or the Forex flow room. And then we have news and research and a Spanish chat room for those of you that are Spanish speakers. So, this is part of what you get with the trader funding program, with the ForexAnalytix, platform. We include that when you're trying to get funded for a larger real money account. And we give it to you for a certain period of time because we want you to succeed, and we want you to be in the community. We want you to have trade ideas, and because it's trying to go about this on your own is difficult. And so, our trading community is, I could say it's probably the best and the most active in the market. So come join us, check out the trader funding program, try out ForexAnalytix. It's $1 for 10 days. If you just want to go that route, just download the app while you're doing it, so you get all the alerts to your phone. And I'm going to pass it off to you guys. I had this up here because I think they're closing out these positions today. This is a real money account from 8cap. If you were watching the trading battle from 5 days ago with Brent Donnelly, he was short crude and short dollar yen. So they should close out the positions today. And both of Brent's trades, I don't think his are going to be profitable, but I'll have $1,100 goes to UNICEF. So those profits somewhere around there is going to be going to UNICEF today. I was checking out because I wanted to know how much money is going to charity. So this is trading a live money account last week on the trading battle for charity. So hopefully some money got to go there. So great. Anyway, I'll pass it over to you guys, or Dale, back over to you.
Okay. Sent you a message, Blake, on the in our chat.
Okay.
Okay. So, we have some more time. I explained to you why there. I just found out. But if there's anything else that we want to cover, yeah.
But
I didn't want to be public about it, but because he's a great guy, but an anti-vaxxer. So I think they're going after people like that.
That's that's kind of sad. Okay, Dale. Unfortunately, Dale's
interview
is not going to be here, and
because he's very good. I mean, he was bearish at the top, etc. So anyway, it's just another sign of the times.
Just to fill in a gap, we've had the Philly Fed services out, which had a big bounce back from a really crap month last month. It came in minus 16.2 last month, and it's bounced to plus 15.9. So that shows a bit of recovery there, and it shows maybe a bit of a one-off effect that we saw last month, and so it sort of flattens out a bit.
I want to say one thing.
Wait, I'm sorry, I got to address this. Stephen asked, just wondering, do you copy or steal our strategies on the funding program?
Yeah.
Okay.
Wondering.
Let me just answer this really quick. I could honestly give two craps what you do when you trade the markets, as long as you are making money and making the positive steps towards getting funded. We all trade our own way manually.
Just to give you an idea, we don't give a crap of.
Steve, let me finish. I just want to say, we don't care what you do as long as you're making money.
And welcome to F.A.C.E, Steve. Welcome to F.A.C.E.
We don't even give a crap what it's one of us trades, and we know what they do, right? Because once you get a little bit experienced in markets, you'll realize that if your only strategy is to just take ideas right and left
from everyone, and you never learn.
Yes, exactly.
Yeah, we all trade our own way. I could care less what you do. And
anyway, look,
sometimes no one here cares. I just want you to actually make money and get funded. That's all I care about. And if you need some help doing that, that's what the community is all about. So yeah, we could really.
The only thing we want these guys to copy is how we manage risk, and that's what they can learn.
You know what I'd like them to copy? How about our ethics? That he's actually questioning. Copy those.
Yeah, no, I know. I think he's asking in appropriate, I don't use MT4, and I know that MT4 is the system that's used, but I don't even use MT4. I don't use any automated EA, blah, blah, blah. I know some people that do, but that's your own business. Yeah. I do want to point out what Ryan just said. One of the things that you'll hear us talking about quite a bit is we talk a lot about risk management, and that's the most important thing. But we're going to have a special webinar to the people that attended last week's webinar. That's going to be on Friday. But one of the things I just want to mention is when you're doing, the funding program, or you're trading just in general, even if you're not doing the funding program, it's all about risk management. That's the only thing we as traders have control over, is what your risk is. And as long as you're controlling that with the appropriate amount of leverage, not putting yourself in hot water, that's the most important thing. I've seen too many people blow up because they just, they get over leveraged. They don't put in stops. They just, they imagine they're always right, never wrong. They can't take a loss. I mean, that all factors into success and profitability, right? I mean,
that's what people need to watch. I can be short euro dollar. Blake could be long euro dollar. We have different strategies, different ideas of what is
different TFs, different time frames.
Exactly, but the way we go about implementing the trade will be exactly the same. We know our entry, we know our stop, we know where we're going to look to take some profit, and what we're going to do if we're wrong. And that is the same for every trader. Every trader who knows what they're doing. K-Man, Dale, Steve, Stelios, Amanda, Leandro, all of them. When you see traders who execute their trades the same, that's what you've got to learn. Forget what their views are on the market. That's down to you and what you think and how you read charts or whatever. But how you execute the trade should be exactly the same. That should be boring.
Right. And one thing that I have to point out here is no one, especially me, but including me and especially me, I don't ever run around and tell people that, the way I do things is the right way, because it's the right way for me. It may not be the right way for you. And so our community or our chat rooms are all about just kind of, finding people that hey, I have a lot of respect for what Ryan does and how he trades the market. So when he, says I'm or K-Man or Dale, and they say, oh, I'm short the euro, I'll stop what I'm doing. If I was long or thinking about being long, I'll go, okay, I wonder why they are going short. Exactly. Maybe am I missing something here? and then I'll start paying closer attention to it. But it's not going to necessarily alter the way I trade or make me, say, oh, I'm short and he's long. But I will tell you this, I find a lot of my trades from our community, and that is a very true statement, because a lot of times people are looking at things before I can see them, or while I was sleeping, or, and I might've been focused on the Euro Norway, where somebody else is like, no, you should look at the Euro CAD. And I'm like, oh, and I go over there and, there's the mover, so it's really, really important. And
that's a good point what you make, Blake, because there has been times when I've been looking at a trade and someone's said something in the room and I thought, oh crap, I haven't thought of that. And if I had thought of that, I wouldn't take the trade. And sometimes it saved you. It saved me from making a loss or getting into a trade that hasn't worked out, because you read everything that's going on, you make your own decision, but there's a good amount of information in there that can help you with your information flow, help you formulate a plan. Sometimes you may think, that I've got conviction because everyone is thinking the same thing. And sometimes you think, hey, I didn't think of that, and that would have cost me money if I had gone ahead. So
I mean, for example, everybody this morning is talking about the Euro Aussie, hitting some pretty key support. I mean, this is in our chat room, right? Something that if you look, well, you can go through the files too, and you can look at what all the charts people have been writing down. But we're having a really big discussion on the Euro Aussie because it actually hit, really key support, and it's something that we're all like referencing. And so when that's happening, and everybody's looking at the same area, and it's a big confluence, we know, hey, everybody's got their eye on it. And even if you're a bear and you go, well, I'm actually looking to sell that, well, wait till it clears all that support, because everybody's looking at that support, probably buying off that support, So these are all the things that we are, that help you within our community. And that's why when you're in the trader funding program, having ideas, that's half the battle, is just, and the other half is just, making sure that you have good risk management, and that's something else that we love to talk about. Anyway, hey, I just wanted to say thanks everybody for being here. Now we're going to have a special webinar for all the ForexAnalytix subscribers. We call it the Morning Edge. That happens in approximately 33 minutes. So I need to go feed my dogs and then come back and do the Morning Edge.
Who let the dogs out?
Yeah, I got to feed the dogs. They are like a clockwork. They have like the internal clock, and then scratching happens at my office door and everything if I don't get in there soon. So TJ, got to feed the chickens, them too. Yeah. All right. So, hey, thanks everybody. Thanks Dale for being here. Thanks team. You guys are all rock stars, and we'll see you guys tomorrow morning on the F.A.C.E webinar. If we don't,
and it's funny, we can like criticize each other, but someone comes at us and we're like a family. It's like attacking your kids. So anyway, if you don't have a community that you're in, find one. You want to find the best one, you're here right now. Take the trial. And we'll see everyone tomorrow. Don't just count your pips, count your blessings. There are no troops at your border yet. Enjoy your freedom. And we'll see everyone tomorrow. Adios.